Welcome to my channel. I'm Dr. Romano. In today's video, we are going to be talking about the real estate market. It's officially peaking because we see real estate prices going down, as well as the market's taking longer for people to sell their homes. But what I'm noticing is that if you look at the charts and you want to do your own research, you'll notice that there's a lot of corporations that own American real estate today. Whether they're foreign corporations or American corporations. And so I keep asking, why is it the markets aren't doing worse than they are? It's probably because there's so many corporations that own houses, own buildings, own apartment buildings, etc., that maybe companies have a lot of capital on the side. Of course they do, based on their risk strategy and their risk profile. They have to have a certain amount of capital and cash to make sure when those houses that aren't being rented out, that they have the mortgage money for it. Or maybe they've paid it off completely and they're just living off of the equity or maybe the rental income. I don't think that they're making much with the rental income, because when you look at how much it costs for a house anywhere in America compared to the amount that you could rent it out for, it's not a lot. It's not like a 10% return. Back before the late 1990s, you could buy a house, rent it out, and actually make 7-10%. But today, people had purchased real estate in the terms of making equity. And you'll notice that in the Manhattan real estate market, back after 1999, Manhattan real estate investors, they kind of stopped buying Manhattan real estate because they realized, well, they can't buy it based on rent roll, meaning 8 to 10 times the rent roll, because at that time period, 2003, it went up to 14 times the rent roll. So that meant that you had to wait 14 years to make back your money. And so American investors were not going to do that. But then you've seen investors from around the world, because of globalization, and they had money to do so, they came to Manhattan to buy up real estate. And that's the ride and the train ride up the mountain that we've seen happen so far. But you also have to remember, after 2008-2009 period, there was many foreclosures that happened. And because of all those foreclosures, big companies thought that it would be a great idea to take their capital and to buy up all those houses for sale that were at a discount. Before we continue the video, please remember to do thumbs up. It's right there if you like my content and you want to say thank you, Anthony. Thank you so much. And of course, because they probably made 40% discount, they rode the market. As of today, those houses went up a lot more. But what's going to happen when they realize that they can no longer make equity on those houses and they can't sell those houses for what it's worth today? Are you going to see a domino effect in the real estate market with thousands of houses for sale in your neighborhood? Because corporations eventually have to take their profits, right? And the fact is that this time around, because of the interest rates continually going up, they will be much higher than the 1970s and 80s. Remember around 1980? So what was happening was people owned houses, they bought houses in 1980, let's say, and their mortgage rate was 17%. What was happening is that their payments were not going to reflect the actual mortgage amount, because they would never be able to buy it and pay the actual mortgage based on a 17%. So what happened was their mortgage balance was going up and up and up and up and up higher, even though that they were making their payments. But because the mortgage was so high at 17%, think of owning a credit card, a $700,000 credit card bill. Think about how high your payment will be every month, and think about how much of that interest or mortgage principal would you actually be paying. Exactly. So people were not buying houses based on the value or how much their payment was. They were buying houses because they knew that eventually the mortgage price, the actual mortgage interest would go down and they could refinance. Well, how is that going to play a role in today's market? What if interest rates actually go past 17%? The fact is, I believe that they're going to go much higher than 17%. Because you have to remember, the government right now has to increase the interest rate because of the debt that they have to make it more lucrative for investors to buy the American government debt. So this is going to be an incredible market. It's going to be an incredible free-for-all once the change does happen. I just feel that corporations, whether it's other countries around the world that owns this real estate, like there's one country that owns more than $2 to $3 trillion of American real estate. Well, what happens when their country leaders or those country investors have to pull out of the American market? That's going to be a scary thing. Or what about in the big cities where the real estate market did go up over 20 years? What's going to happen to all of those office buildings now with people working from home and people moving all around the US to work from home? No longer is Manhattan or the big cities the hub to find a job. So what's going to happen to all those high-rises that once housed those people for apartments, for office buildings, etc.? The question is when is this bubble going to burst? And what will it look like? Yes, I understand that people buying a house now, a couple years ago, they had cheap interest rates and the price was moderately high. But what happens now for the past 5 years? You have to hold that real estate for at least 7 years to make back what you actually bought it for. And you have to remember your interest rate was actually really low. So if you buy something in the near future, your interest rates are going to be really high. It's going to be a disaster. I just want to see how it's going to play about. And another thing that doesn't make any sense is commodity prices are very low right now. Typically, when there's a stock market collapse, commodity prices go through the roof. But right now, commodity prices are going down. It's actually a great time to buy gold and silver because it is so low. So, based on what I know about the markets, I personally believe that there's a government out there that's selling their gold and silver reserves. Just like in the 1990s, when our government and governments around the world did that, it created the gold prices to be at its lowest in 30 years. However, since January of 2022, this year, for the past 9 months, the stock market has gone down and it looks like a beautiful pyramid going down the mountain. Is that a stock market collapse? I would say so. I want to thank you so much for watching my video. Please remember, if you want to subscribe to my channel and see my future videos, to press the button and to do thumbs up if you want to say thank you, Anthony. It's right there. All you have to do is press it. Thank you so much.